My name's Ethan Braid. Today we're going to talk about the Vanguard Balanced Index Fund and what you can expect in terms of income from this fund if you're a retiree and you're using this fund as part of your retirement plan. Over the last 25 years, it's been my discovery that many retirees or people nearing retirement don't know how much they can spend off of their investments sustainably. So what I'm going to show you today is what you can expect from a fund like the Vanguard Balanced Index Fund. This is a very popular fund. There's over $50 billion in this fund. It's widely used by retirees, so that's why I chose to look at this fund for our illustration today and talk about what you can expect in terms of income going forward from this fund as part of your retirement portfolio. Let's quickly talk about what the Vanguard Balanced Index Fund is. Then we can move on to estimated income for this fund and some spending strategies that you may want to consider if you're using this fund as part of your retirement portfolio. The Vanguard Balanced Index Fund is what's known as a moderate allocation mutual fund. It's very inexpensive. It only costs 0.18%. It runs an asset allocation that's about 60-40, 60% in the stock market and the remainder, about 40%, in bonds and cash. And the fund has what I will call a growth component to it for the equity sleeve. Notice that there's 37% in this large cap growth bucket. There's a little bit of money in mid caps and small caps. It's predominantly weighted towards large cap and mega cap stocks. And also notice that the fund is predominantly in the Americas. There's very little international exposure in this mutual fund. Here are our top holdings. You can see that there are a lot of well-known names, big companies in here. Apple's 3.74%, followed by Microsoft, Amazon, Nvidia, Google, etc. A lot of these companies, by the way, don't pay a dividend. These are your typical growth type stocks. And that's going to factor into what you can spend off of this portfolio in terms of income that we're going to get to in here in just a minute. Our first illustration will be for $1 million investment in the Vanguard Balanced Index Fund, where we're looking at only spending the actual income that the fund produces. And this is important because a lot of retirees are spending income and principal off their investment portfolio, and oftentimes they're not aware that they're spending principal. You hear things like the 4% rule or maybe the 5% rule, and in those situations, retirees are generally spending principal in addition to income. So this is an illustration for making $1 million investment in the Vanguard Balanced Index Fund in the year 2000. Okay, right before a recession. And what we can see is if we only spend the income, which I'm going to show you those numbers here in just a minute, if we only spend the income over the last, say, 24 years, our $1 million investment, the principal component, has grown and more than doubled. It's about $2.2 million today. Let's take a look at the actual income that this popular mutual fund distributed to investors over the last 20 plus years. Here's your $1 million investment in the year 2000. And this distribution withdrawal column is the actual income that the fund earned. This would be dividends from stocks, any capital gains, interest payments from T-bills, money market, bond coupons, etc. And we see that in the year 2000, there was almost $37,000 or 3.7% of income produced by the fund. And then it drops. As the market starts to drop, we can see that our income is going down due to the recession, some dividend cuts, lower interest rates, etc. And then we see that in the later years, the income starts to move back up. And recently, we see a large distribution here in 2023, and this was partially due to capital gains distributions. But over time, our income did grow with this fund, and our principal, which was originally $1 million, is now $2.2 million after this 20 plus year investment sequence. Here's a look at what you can expect for income from the Vanguard Balanced Index Fund going forward. The current yield is 1.9%. So if you're adding this fund to your retirement portfolio, you put $1 million into it, you're going to earn $19,000 a year based on the current dividend. Not a lot of yield there for this Vanguard Balanced Index Fund. So the question that you need to ask yourself is, can your budget tolerate, say, $19,000 a year if you were using $1 million investment in this, or a 1.9% yield? Will this generate enough income for you? If the answer is no, then a fund like this, or this fund in particular, is not going to give you enough income, and you're going to need to spend some principal in addition to the income that the fund provides to you. The reason that the yield on the fund is low is because that 40% of the fund only has a current yield of 3.3, and then the other 60% of the fund, which is in the stock market, is weighted in growth stocks. And many of those growth stocks, like Amazon or Tesla or Google, they don't pay a dividend. Therefore, the yield on the stocks is pretty low, resulting in a total yield for the portfolio of the 1.9% that we just looked at. Here's the danger of distributing not just income, but also principal out of your retirement portfolio. This is the Vanguard Balanced Index Fund, making $1 million investment in the year 2000 and distributing 5% grown for inflation. When you're distributing more than the portfolio is earning, you're running a risk. People talk about the 4% rule, the 5% rule, so on and so forth. The more you take out, the more likely it is that you'll run out of money over time. So in this illustration, we do run out of money. Let's take a look at the numbers. We start with $1 million in the year 2000, and we start taking out $50,000, 5% in the first year, growing that by 3% inflation each year. And here we are running out of money in the year 2022. Notice also that in the first year, look at our income, it's just declining. This total reinvest column is the actual income that fund produced. So you can see the discrepancy. Here's what we're spending, here's what we're earning, and the more you outspend what you're earning, the quicker you run out of money. So for most people, they're going to need to spend something more than 1.9%, but you got to be careful, because if you spend too much, in this case 5%, you run out of money. If you're planning for a 25 or 30-year retirement, and in this case we ran out of money before 25 years, you've got a problem. So you really want to be careful when you're thinking about your retirement investments. Take a look at what they're paying you. What is the dividend yield on your investments? There are a lot of great investments in today's environment where you can get 4, 5, 6, even 8% on some types of investments. There's a lot of yield out there finally. After a long time, we're now getting paid yield for lots of different investments. So be very careful. Take a look at your investment portfolio. Determine what's sustainable. And if you're going to spend principal, have a conversation with your financial advisor. Contact me. Figure out what can you sustainably spend in terms of income and principal, because there's a limit to it. And in my opinion, when you get much beyond 4%, you're in the danger zone with respect to running out of money in the course of your retirement. I hope this video was helpful. I hope this video gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.